Looking to grow your wealth through real estate in the USA in 2025? Real estate remains one of the most reliable ways to build long-term financial security, providing steady income and the potential for significant appreciation. In this video, I'll guide beginners step by step on how to start investing, whether it's rental properties, REITs, or tax-advantaged retirement accounts. By the end, you'll have a clear, actionable roadmap to get started, even with a small budget. Let's start with rental properties. Owning a rental property is one of the most common ways Americans invest in real estate, and it's easy to see why. Rental properties provide regular monthly income while also giving you the potential for your property value to increase over time. When choosing a property, focus on areas with strong rental demand. Look at factors like local job growth, schools, and upcoming development projects. Even if you can't pay the full price up front, mortgage financing allows you to get started with a smaller down payment. And remember, the key is to buy smart, not just buy fast. Start small, learn the ropes, and gradually scale your portfolio. If buying a property feels intimidating or out of reach, REITs, or real estate investment trusts, are a great alternative. REITs let you invest in large commercial or residential properties without directly owning them. You earn dividends and can benefit from property appreciation, just like owning real estate, but with lower costs and less hassle. REITs are ideal for beginners because they provide diversification. Your money is spread across many properties instead of being tied to a single home. They're also easy to buy and sell, making them more liquid than traditional real estate. While real estate is powerful, it's not without risks. Properties require maintenance, and market values can fluctuate. Always have an emergency fund for repairs, vacancies, or unexpected costs. Diversifying across property types or locations can help reduce risk. For REITs, check the company's history, fees, and types of properties they own before investing. Planning and research are essential. Don't just follow trends or hype. Another major advantage of real estate is its tax benefits. Mortgage interest, property taxes, and depreciation can all provide deductions that save you money. For long-term investors, these tax advantages can significantly boost your returns. And if you want to grow your wealth in a tax-efficient way, consider investing in rental properties through self-directed IRAs or other retirement accounts. This strategy allows your investments to grow tax-free or tax-deferred, giving your money more time to compound. For beginners, here are some practical tips. Start small. Don't rush into buying multiple properties at once. Research the market thoroughly before making a purchase, including property prices, rental rates, and neighborhood trends. If managing a property feels overwhelming, hiring a property management company can save you time and stress. Always track your income and expenses carefully, so you understand your cash flow and can make informed decisions about future investments. It's also important to understand the bigger picture. Real estate is an get-rich-quick strategy. It's about building wealth steadily over time. Consistency and patience are key. Whether you invest in rental properties or REITs, starting early gives your investments more time to grow. Even small monthly investments can compound significantly over the years, thanks to the power of compound growth. Education is critical. Read books, follow trusted finance YouTubers, or take online courses to improve your knowledge. The more you learn about real estate markets, property valuation, and investment strategies, the better decisions you'll make. Keep an eye on trends, stay informed about laws and tax changes, and don't be afraid to ask for professional advice when needed. Another strategy to consider is house flipping, which involves buying undervalued properties, renovating them, and selling for a profit. While this can be riskier than traditional rental investments, it offers the potential for higher short-term gains. Beginners should approach flipping cautiously, starting with small projects or partnering with experienced investors to reduce risk. Networking is also essential in real estate. Connect with other investors, real estate agents, and property managers. Networking helps you learn about opportunities before they hit the market and gain insights from experienced investors. Local meetups, online forums, and real estate clubs are excellent places to start building your network. Don't forget the importance of location. Even the best property can struggle if it's in the wrong area. Look for neighborhoods with growing job markets, low crime rates, and access to amenities like schools, hospitals, and public transport. Location often determines rental demand, property value, and long-term appreciation. Finally, set clear investment goals. Are you looking for steady monthly cash flow, long-term appreciation, or a mix of both? Define your risk tolerance and timeline. Then choose properties and strategies that match. Having clear goals will help you make better decisions and avoid impulsive choices driven by emotions or market hype. Real estate investing can truly transform your financial future if done wisely. The key is to start early, stay consistent, and make informed choices. Whether you choose rental properties, REITs, flipping, or tax-advantaged accounts, taking the first step today is the most important thing. Start small, stay disciplined, and watch your wealth grow over time. If you found this guide helpful, don't forget to like, subscribe, and share it with anyone who wants to start real estate investing in 2025. Your financial future depends on the choices you make today. So take action now and start building your wealth.